A. Subbarao, Group CFO at the GMR Group, joins in on the show. Mr. Subbarao, appreciate you taking the time out and joining in. First, your major expectations from the budget for the power sector this time.
See, why should we expect something? It is a bond and duty of the government to do what is right for the sector. So the needs of the sector have to be taken care by the government. That's what the government should be doing. So just because we expect or don't expect, the government should be doing or not doing anything. So everyone knows the problems for the power sector. There is a huge fuel problem. There is a distribution ability. There are problems with the distributor, is their ability to pay for the power they buy. So these are the problems, and everybody is aware that otherwise the country will go into darkness if we don't address these problems. So the government should address these problems.
Morning, Mr. Rao Nikunj also joining in. So let's be specific here. The key problem which currently is impacting the entire Indian power sector is fuel supply and coal linkage. Do you expect to hear something from Government of India this time around in Union Budget 2012?
I think the coal issue has already been resolved to some extent. The thought clarity has already come. The implementation clarity has to come. How Coal India is going to organize the coal supplies to all the eligible power plants, we have to wait and see. Gas, we are waiting for a solution by the government. I think we expect a solution shortly.
Right. Let's also chat about the infra space, Mr. Subbarao. What is it that you're expecting as far as the road sector and construction sector goes? Anything that the industry has pushed in terms of social spending schemes which will aid infra spends?
I think there's a lot of push that is already happening in the rural sector from the budget. The rural sector is receiving a lot of support from the budget. I think we would expect that to continue to trigger more and more infra spending in the rural areas, which would again trigger infra spending in the urban areas. What is happening from the government, I think that is adequate now.
What about lending and financing and other debt-related problems which are currently plaguing the entire infra sector? Do you expect a mention of that in this year's budget?
Last budget, if you remember, they have mooted the concept of infra debt fund that has taken shape, that has to start working. And what infra sector needs is the long-term availability of the money at fixed price. So that has to be ensured. And the availability of the long-term resources for that can be pulled in the country should be made available to the infra sector. So a lot of tax concessions are required to make that long-term funding available for the infra sector. Some kind of tax concessions, incentives particularly to motivate the public and corporates to invest in the infra sector. So we expect that kind of policy framework to be announced. But government has its own revenue considerations. We have to see under the constraints for the government, revenue constraints for the government, what the government can do to make the long-term finance available for the infra sector.
So, Mr. Rao, any expectation from the air and realty sector, because they will indirectly benefit your, duty to your airports, SEZ, as well as realty land parcels?
So, government has to address certain key things in the budget. Government has to come out that the fiscal policies which they promise would never be reversed in the future. The SEZ sector is a victim of that reversal of the policies. Government has made such announcements saying that the SEZ would be free of any kind of taxes. It would be free of MAT. It would be free of dividend distribution tax. Suddenly there was a reversal of this policy. So government should restore this tax-free policy for the SEZ sector to restore the confidence of the investor in the country. So once the investments are made on a particular basis, that investment should not be impaired by changing the policy. This is a fundamental statement that the government has to pronounce in the budget, and government also has to address the fiscal issues. The fiscal deficit which is ballooning, and the ballooning fiscal deficit has certain implications for the infra sector. It makes the capital available less and less for the infra sector because fiscal deficit sucks away a lot of the domestic savings. It also increases the cost of capital. It increases the inflation. So the fiscal deficit has to be contained to help the infra sector. So government has to address the fiscal deficit. These are the key issues that government has to take care of in the budget.
Mr. Rao, let's talk specifics now, not budget expectations. What's the update on the financial closure of the 7,500 crore Kishangarh-Ahmedabad highway? There is also news doing the round that the company is looking at raising about $300 million via stake sale in some of the key road projects.
Yeah, we are working on the financial closure. We are inching towards the financial closure. We hope to achieve the financial closure by April end for the KUA project, Kishangarh project. On the 300 million equity raising, as of now, it is speculative news, and we don't comment on any speculative transactions unless we reach a finality in those transactions.
So what's the update, Mr. Rao, on the issues of ADF, and till when can we expect the Delhi airport to break even for the company?
ADF has already been addressed. We have been collecting ADF effective from 1st of December. What needs to be addressed is the tariff hike. And the tariff hike is likely to come either this month or next month, based on what we have been hearing from the regulator. We expect, depending upon the tariff hike, either we would break even next year or the year following. Mostly we should break even next year itself.